means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we break down the markets one step at a time, stocks, options, commodities, currencies, pretty much any topic that we want to talk about during the show, break it down, analyze it, give you guys some information, and help you better run your daily routine. Welcome out. If you're a veteran of our community, you already know what I'm going to ask you. Hashtag Team Tackle right in the chat. Represent and kind of represent our tribe, our team, our community. It's our official hashtag Tackle Trading, and we do love seeing that. And by the way, I've loved the conversation lately. You guys that are active members, the halftime crew, those of you who are here on a regular basis, I love seeing you guys chat back and forth with each other, talking markets, talking stocks, talking about, the financial part of this whole thing, and keep that energy up. And by the way, if you're brand new to our channel, subscribe, click the bell, come back and join us each and every day and join that conversation in the chat and be a part of that halftime crew. Today's show, a couple things. We're going to break down Home Depot and Walmart earnings, also Baidu earnings, and kind of get Coach Matt's take on that. And then the market response from Coach Noah as we're looking at the charts. Amazon announces their online pharmacy so you can get, your prescription drugs delivered right to your door in 2 days. We'll take a look at that as well. Tesla finally got included into the S&P 500. Pretty big announcement, not only for the index, but for that company, obviously, specifically. The stock was up big this morning. We'll look at the chart, break it down, and then just broad market analysis, kind of a continued theme of what we've been talking about for some time. Markets are hesitating a little bit here today in the face of, after quite a big upward move over the last little bit, a little upward resistance as well on some of these charts. We'll have Noah break down those one at a time. Got a full crew here today. We've got Coach Matt on the back end doing analysis. Matt, how you doing, sir?
Tim, doing absolutely fantastic. Excited to be here with the crew to break down the news of the day, and excited to have Coach Noah here to break down the technicals. One of the best technicians in the market in Noah Davidson, and I just love getting his read on, the price action in the market and obviously the stocks we talk about on a daily basis.
Coach Noah, I really believe one of your strengths is taking something that looks complex and actually breaking it down into an understandable and digestible way by people out there. Love the way you read charts. Love the way you teach charts as well. It's always great to have you on Tuesdays with Noah. That is my new name for our Tuesday show. How are you doing today, sir?
I am actually doing really, really well, Tim. We had an awesome lounge this morning. Had a good time. We talked about the occasional opportunity to swing for the fences and doing some back ratios in the traders lounge. And I know we got a lot of the same folks here. So that was a lot of fun. And otherwise I'm in a pretty good mood. It's a gorgeous day outside.
It's a beautiful day out
I
there.
want to go out. So let's get this thing done here.
Yeah.
Beautiful day today.
Yeah. In fact, I challenged my daughter to make me go out and I love walking. And especially when I've traveled or worked downtown or whatnot, working from home, I haven't walked as much lately. I challenged my daughter to have me go out and take a walk every day, Noah, right after the halftime report. So you hold me to that. Ask me about that in a couple of weeks. See if I've done it. All right.
All right. Sounds like a plan.
By the way, you mentioned the Traders Lounge. I think it's really cool. If you're out there and you're a member of this show and our YouTube channel, you may not know much about our back-end products. No, you do that regularly, the lounge, and it's 11 o'clock Eastern. Is that right?
Yeah, 11 o'clock Eastern, 9 o'clock Mountain. We have a good rotation of just awesome coaches. Like everybody gets a little bit of time with folks like Gino and Tyler and myself and whoever else is filling in for the day. And it's just it's a fun environment where we get to just talk shop. And I think they get, this having a nice rotation of coaches in there kind of creates something of novelty and new all the time, different perspective, different angles, different strategies. And it's one of my favorite things that we do just because you get in and it's just talking shop, like, looking at charts, looking at trades, talking about, whenever I'm there, we're always talking about adjustments or a strategy or, or whenever Gino's there, they're learning some cool, day trading techniques or, different strategies as well. Just, you get a little bit of everything. And I think it's awesome. Yeah.
I always think it's fantastic. The students that want a little one-on-one help. Hey, I have this spread on this stock and it's moved this much. What do I do? And the coach will literally take your exact strategy. You let him know the strike prices you're using, what stock, and he runs through it and be like, okay, this is what's happening. You can do this. You can do this. So you get that one-on-one help within the lounge. And, when you do that help, it's not just, oh, how many other students have that same strategy going? Like, oh, that's how I can adjust it. So it becomes a really good teaching moment that gets you a little bit more interactive that our pro members get that you don't necessarily get here.
And Noah, when you're saying talk and shop specifically, it's not like you're on the halftime report where the coaches are talking shop together, like Matt and myself
Yeah,
and
no,
you're talking shop with our pro members.
yeah, we're
Correct?
getting in there and we're getting down into nuts and bolts, and we never really say we never sit there and say do this, do that, or here's a trade, take it. Like that's not what we do.
It's always advice.
It's never advice. It's always educationally oriented. What you can do, what are the pros, what are the cons, what are the risks, what are the rewards, and then breaking down strategies. Like, okay, so this is your situation that you're in right now. Well, what are the choices? What are the options you have? This today, for example, we were talking about a nice little horizontal that was in profit, and somebody was pretty happy, had a nice little trade, 100% profit on a very low risk trade. And the question was, well, what are the benefits of staying in and seeing if the time decay works for you, or should I take the money and run? And we didn't give him an answer. I didn't say, yeah, you should take the money and run. We just broke it down and said, well, okay, here are the pros. If it stays in this neighborhood, you can sit and benefit from the time decay. If you're happy with the current gain, it's always a good idea to take a gain. And just talked about it through pros and cons. And it was a good way for people to understand that particular strategy, which was a horizontal spread with the exact same strike prices, different expiration dates. Mm-hmm. And it was a nice little trade. It was just a good situation to talk about so people understand what happens with that type of trade and kind of the decision-making process that the individual trader has to go through. And then, we always get to see people's victories and when we have a nice game, we get to pat everybody on the back. Everybody gets to have that good, feeling when they share in the success, but then they also get to talk about, bad when trades go bad. Like, okay, I had this bear call credit spread in and the stock gapped up and things didn't go so well. How do you manage ripping off the Band-Aid, or what can you do to reduce the damages, that type of thing. And so we get to learn from each other's mistakes and missteps at the same point in time. And it's just a really good, valuable group environment.
Mm-hmm. And I did just post the link directly to the Traders Lounges. One of the things I love hearing from students is when they get good feedback from coaches in those lounges. So if you're a pro member, make sure you attend. And if you're not a pro member, it's one of the components of our pro membership. There's always a 15-day trial in the comments below. And Noah, one of my favorite things you guys do is when you click record. And you don't do it all the time. It's just whenever there's a real cool moment. Today. Oh, did you?
I hit the record button, recorded about a 30-minute segment on back ratios, swinging for the fences. And when you have a good technical setup and you have a reasonable expectation that the stock price could really, really run. And we talked about setting up a call ratio back spread. What are the pros? What are the cons? What are the risks? What are the things you have to watch out for, and a little bit about how to manage the trade, and gave them kind of rules and steps and things to follow. And again, we always encourage people to practice things in their virtual accounts and get good at them before they ever take any strategies live. But yeah, we got a nice little 30-minute segment. And so if you were to join pro membership today, you could get in and access that recording.
I love those recordings. Looking forward to watching it. Let's break the markets down step at a time if we can here. Let's just start with the technicals. We'll get to the news here in a bit. From a broad market standpoint, not a lot of big news here today, more individual companies that are interesting, and we will get to those later in the show. S&P 500, kind of an inside candlestick, Noah, here. What are you seeing in the chart?
Well, I think the one thing that I noticed today that I thought was most interesting was yesterday's break was really nice. And then the fact that it closed right up near the high gave us a nice little bullish sentiment. And then in today, you got that inside candle. But the one thing I noticed, Tim, is that it came down and the bottom of that shadow aligns really, really well with the bottom of the previous candle. And if you look back to the left, clear back in August, it's the double top resistance back in here. And so it's a retest. And if you were to, again, break that down into like your, intraday time frame down in here, you can see where it put in a little double bottom intraday, and you're actually seeing it move up, and that's a known support zone. And so that, daily candlestick right there, that shadow we see on that, I think actually leads to the potential for, some follow through on yesterday's breakout. Now, if it ends up closing back down and we see the red candle finish out the day, we'll be back into that retest zone and see if that momentum is going to hold. But, so far, the fact that, for the most of the morning, we've been seeing it trade up off that bottom, I think bodes well for the bulls.
Mm-hmm. Matt, obviously price action has been bullish here recently. Is there anything in that chart that would take you off of that? Obviously, it's kind of an inside candle today. I'm assuming I know the answer, but what's your take on the chart right now?
No, I mean, you're going to have some chop action in upward movements in price. You're going to have some chop action in downward movements in price. You got to look at where those key levels are that, find support. And I think Noah correctly identified, kind of what happened today. Yesterday, I mean, anybody's got to call that confirmation on the daily chart with the breakout yesterday of the high base. You closed above that 3,600 level. Obviously, there's a bullish sentiment out there in the marketplace, and I do think it's positive that you come here on a Tuesday on a, I mean, it's a light news day from a market perspective, but I kind of like, when we get back to markets that are individual stock driven instead of just, broad market, type analysis. And, when you're looking at the S&P 500 today, you don't have a lot of major broad market news. There isn't really anything to talk about from a theme today, or there isn't anything to really talk about from a geopolitical or an economic report. Yeah, we had some minor economic reports on the overnight action. But what you're looking at, and because of that, I think you're looking at this pure technically right now. And when you see kind of the snapback retracement, pullback we saw in the intraday, that was really kind of the European hours. If you drop that down into an intraday chart, either a 15-minute time frame or a 30-minute time frame is fine. But when you drop that down into that lower that intraday chart, you see that the market yesterday, or excuse me, today on the overnight action. Where does it start coming down a little bit? It starts coming down on that overnight action right there at about 2 o'clock in the morning, which coincides with the and if you give me a little bit narrower time frame there, Noah, maybe even a 15-minute chart, that'd be great. But if you look at kind of where that downward movements in price start happening, it really is in that 2 a.m., 3 a.m. Eastern Standard Time ballpark. And you saw some sell-off in the overnight action, but where did it find support? Literally on the cash open, right where the breakout channel was between 3580 and 3600. So when I'm looking at this, I'm saying yes, markets don't just go up. We all know that. That's fine. You look at these down days or these neutral days, and you try to find certain patterns, and your confidence starts to build a little bit when you had a fairly aggressive sell-off on the overnight action. But where does it find support? The breakout channel on the daily chart. So I think Noah's got a proper technical read there, and I think we're just looking at a continuation of this bullish uptrend at this point.
Let's take a look at all of the 4 indexes if we can here, Noah. Obviously, and I love that analysis here on the intraday as it's bouncing back and forth. It's developing a little bit of a range. Played a little defense. Matt, it could have sold off a little sharper there. It was looking like it wanted to sell a little bit, but the market's been resilient.
It certainly could have sold off a little sharper. And the reasons why we would give it are, there's plenty of reasons why we could give, any logical sell-off in the marketplace. But when you see these types of sell-offs, you got to look at that intraday and say, okay, is this truly a sell-off, or is this just a little bit of profit taking on an intraday? And when you have support, intraday support, which are the weaker areas of support on a chart, obviously daily support, weekly support, as well as those monthly longer time frames are a little stronger from the support level. But to see a sell-off like that on the overnight action, hold its intraday support level on the breakout range, I think in terms of just micro analysis, I think that's fairly important in the short term. Think about it like this, Noah. If the market doesn't hit that support level and comes right underneath that support level, you have a different read on it technically, don't you?
Oh yeah, for sure. Like I was watching that kind of give back those gains from yesterday, and my big question is, well, is it going to hold the retest?
Yeah.
And if it doesn't hold the retest and it comes a little bit deeper, doesn't mean it can't bounce off the 9 or, still, do a nice little pullback and then break out. But it certainly changes my short-term expectation of, is it going to break out on Wednesday again, above yesterday's high? So that retest, and then again, just that inside candle. I think inside candles are usually a pretty good springboard for a move. Doesn't necessarily tell you which direction. Sometimes you see an inside candle like back in here and it's a harami and you see a change in direction. Other times you can see an inside candle and it can be a, continuation or a breakout. In this case, that lower shadow thus far shows me that the retest is holding. So, and it depends on where it closes for the day. I'm not sure what kind of news catalysts we have this week as far as economic reports and things of that nature.
It's not a lot. It's
not a lot. Pretty quiet week, right? So, from a purely technical perspective, I really like the fact that it came back and retested that exact same old high level on the intraday chart here.
Yep.
And again, at this point in time, it kind of leads me a little more bullish. It just depends on how high that close is today. If it can close a little higher, then I probably take that signal a little bit more seriously. But if it ends up closing back down, then it'll be like, okay, I'm going to, watch and wait and see if it catches up with that 9 or what happens in that. It could always retest and then find that support tomorrow.
But I think it's important though, because if if you close underneath the low of today, you do have a different technical read, and some of the charts that are setting up, you might have to wait a little bit more on. With intraday support holding, and now you're threatening a continuation breakout from yesterday, I think that opens up the possibilities for trades today, tomorrow, the next day, a little bit cleaner than, say, if we're hovering towards the lows of today. I think the market recovery in the short term is always positive.
As far as economic reports this week, Noah, one of the bigger ones was actually this morning. Core retail sales, red impact potentially. Historically, it has been a mover. Didn't really even move the needle here, Matt. 0.2 versus the 0.6 expected. Still had growth, but not as much. And the market didn't really respond to it. So I'm not sure the economic data is going to move this market right now. It's not really been the focus in the short term. I mean, Matt, does anything grab your attention economically this week?
Not this week. No, we have a very light week economically, and retail sales were important, and we saw some areas of retail sales that were concerning, but there's not a major economic event this week. And even though some of those calendars have red or orange on them, it's really market dependent at the time. And right now, no, this market, I don't know how many times I have to say it, but this market has embraced a theme, and that theme is 4 to 6 months, guys. And that theme is, part of it's vaccine, part of it's Fed, part of it's, fiscal stimulus potential following the first of the year. But this market has embraced a theme that will discount the economic reality of the short-term situation when they think about growth potential coming down the road.
Noah, let's do a thorough technical breakdown of these 4 different indexes. You've already looked at the S&P. Flash through the NASDAQ, the Russell, and the Dow. Just tell me what you're seeing.
Now, can I just clarify one statement very quickly?
Sure. Yeah.
I personally am concerned about growth. I'm personally concerned about the fundamental backdrop. I'm personally concerned about the economic backdrop. I don't believe the market is concerned about those things right now.
Not right now. I agree with that. I don't think they're concerned at this point. What will be interesting is if and when they do start to consider those type of factors. But at this point, I don't think they are. No, flash through these indexes if you can.
Yeah. On the NASDAQ today, you got a small inside candle. But what I really like here, Tim, is what I see is kind of a real ugly cup and handle type formation where it came up and tested that 12,000 ballpark resistance. You got a little poke out the other day. It came back down, put in the higher low off the moving averages, and it's just meandering back up into that resistance zone. And I think, you need a little bit more confirmation and energy than you see today, but I like the general setup. That cup and handle doesn't have the cleanest trigger in the world, but it's got the right general context. And again, anytime I see the higher low after that resistance test, and I see that general kind of cup and handle picture form, I get excited. I like those. They got a good probability of breaking out. So I like that. Today's candle does nothing for the inspiration at all, though. Just kind of meh. Let's switch gears and look at the Dow. Dow poking up there by the all-time high there, 30,000. Within shouting distance right there. It's just not even shouting distance. Like you could use your inside voice. It's that close. It's right there. Long lower shadow, very similar, kind of a retest on that consolidation area in here. And again, we'll probably follow suit with the other indices, but the fact that it's right there near those all-time highs, and that's a big number, big psychological number. So a breakout above that, I think, would bode well. And then what are we going to look at? The Russell RTY. Look at the Russell go. It's got the most bullish sentiment across the board. It's got the, today's candle's green. That's kind of I don't know if you'd call that a textbook dragonfly type Joji with the there's a little bit of a head on that, but it's got that long shadow where it came down, retested off of that same consolidation zone right up there near the open, and just shy of yesterday's high. And so I like that, as a general bullish sentiment. I like this chart better than I like the S&P as far as, today's signal goes, and that inside candle kind of erases what it gave back overnight.
Give me an hourly or a 15-minute chart on that Russell as well. Matt, you've been talking about how you would actually have the Russell in the short term ranked higher than some of the other indexes. It's been incredibly strong. We've talked about it with Coach Tyler on the podcast yesterday. And Tyler is famous for how much he loves small cap investing and all that kind of stuff. He built a whole system around it. And the Russell has kind of come back into favor here recently. This intraday response, I mean, it doesn't look like a big deal, but in my opinion, it held, which is important information, old resistance, new support. It was down almost 1.5%, Matt. We've rallied back to break even here, and we're now pushing towards another potential breakout. Matt, do you still see the Russell as the strongest in the short term of all the indexes?
Absolutely. From two different perspectives. One, technically, I think it's outperforming right now from a price action perspective. Post-election, you're talking about the Russell 2000 up 16%. I mean, that is a historically amazing move. I mean, put it into any vein of historical analysis, and you would say that is an amazing historical move. S&P is up 10% in the same time frame. So, the Russell 2000 has showed leadership here in post-election analysis, and based on the theme that has been adopted by the marketplace, in my opinion, the Russell 2000 should lead in that environment. It's a pro-economic theme is what it is. And so when you're talking about those pro-economic themes kind of happening, unlike economy reopening of plays that still have concerns over COVID data and what's happening with COVID, when you look at the Russell 2000 from an economic perspective, when you look at the Russell 2000 from a technical perspective, you got to say it's leading here. And again, the question I've had for the last week, and the question that continues to be answered in the positive, is does it have legs? And even today, showing relative weakness on the European markets, on the overnight action, cash open, it's showing relative strength here on the recovery. So yeah, you're looking at it now if you will switch back out to a daily chart here, Noah, you're looking at this as a potential breakout yet again on the Russell 2000. Looking at that 1800 number, very, very significant whole number, psychological number right there. Not a lot of evidence above that level. You should see some price appreciation and the continuation of, what we've been seeing is very, very, very positive for the Russell 2000. I'll just put it like this. I wouldn't be doing a bear call spread on the Russell 2000 right now. No,
I would not have that leg on it. In my opinion, there's no doubt. No. It's just too strong. I mean, it's too bullish. Yep. Yeah, it's too bullish.
Think about that. It's too bullish. Yeah, that's the analysis right there.
Yeah. Well, and that is a good problem to have if you're long small caps. There's been a lot of names in those areas. And by the way, this is a reflection of what's been happening from a rotation standpoint over the last couple of weeks. Just different areas of the market performing, improving, getting better, as others are and it's not like the others are bearish. It's just we're playing a little bit of catch up with these other areas.
No, Tim, we've been talking about rotation, but I mean, honestly, when you think about it, I kind of said it yesterday where, we're talking about rotation, what's kind of leading out there right now, but it doesn't mean you're not looking at the NASDAQ. It doesn't mean you're not looking at, communications. It doesn't mean you're not looking at those areas of the market. And I'm not sure rotation is the right word for it, even though that's technically how we speak in the market. It honestly just might be a little bit of catch up happening here in the Russell 2000. It's been an underperformer in the market for years. The Dow Jones, an underperformer in the market for years. Energy obviously has been very, very strong in recent history. It's been an underperformer in the market for years. And so you might just be seeing some of these underperforming areas of the market, the value areas of the market, those economic dependent cyclical stocks. You might just be seeing them play a little bit of catch up when they've underperformed the market for a very long time.
Noah, if you could flash through crude oil, gold, and the dollar and Bitcoin for me here. There's not much updating these charts. We'll have a conversation about any of them if anything's grabbing either Matt or my attention, but just give me a read through all of them if you can.
Well, crude to me seems pretty neutral, even though it's back up above the moving averages and had a nice little rally the last couple of weeks. It seems to me like it's back in that consolidation area, still has overhead resistance, still tends to be gravitating around that 40, where every time it goes above 40, it pulls back down. Every time it goes below 40, it pulls back up. It does have inside candles, and there is a bit of a cup and handle look to it, but it has to clear, I think, 43 before I'd really consider that a strong bullish signal. maybe even 43.60 up in that ballpark.
Well, even if it did that, I don't think I'd play the breakout, myself.
Yeah. I mean, I don't have a lot of underpinnings, like, fundamental reasons for it. Especially if we're going to be, if the world's entertaining more lockdowns, that's not going to really increase consumption. So pretty quiet. Nothing exciting there. Gold, pretty neutral as well. I mean, it's still kind of in that inside track, from the weekly perspective. I still like it. It's got, I don't have anything to say against the bullish thesis on gold, but just remember, gold's not a big fast mover. It tends to meander with intermittent runs, but it tends to kind of consolidate, pop, consolidate, pop, consolidate. And it sure is hanging around that 1880 zone. Like it's kind of like oil. It's like it pokes up, comes back down, goes down, comes back up. It's just kind of seems like a gravity pull forward at 1900 ballpark.
Kind of stuck in that range between that support, which it did stick and hold. I mean, you got to be impressed with it. We had the biggest one day sell off in quite some time there on gold, for a couple months at least, just the other day, Matt. And now we've been sticking support. I don't see much here to change any of that. What about the dollar, if you can, Noah?
Same. Well, it's got a little bit of a bearish chart set up. It's kind of a hard pass for me. I don't expect anything out of it, but
just pass.
Yeah, it's neutral. I mean, 25 seems to be where it's hanging out. It's got.
We've already wasted 30 seconds looking at
it. Printing machine goes brr, or whatever they say it does.
Yes.
Yeah.
Well, until it completely breaks down on support, you have to have this as a neutral ranking steer here. Probably a slight bearish side of that. I believe we're on the negative 40 or something like that last week in the Forex report. And then lastly, Bitcoin, if you can.
Now, Bitcoin, on the other hand, woo, look at that thing fly. One of the questions is, is this still tradable? That'd be a tough one for me to chase. I don't like chasing dragons like that. But you could maybe momentum play it if you believe it's got more upside. But that's a lot of momentum, increasing momentum. Here on the weekly chart, we're not too far off of that 20,000 mark. I don't doubt for a minute that it's going to get up there and retest that. It's just a question of how long it takes. It's definitely extended up in the short term, and it's gone parabolic, which just means really, really steep run. And I'm seeing all the signs on the weekly chart of increasing momentum where, candle size increased, difference between moving averages spreading apart, an indicator like a MACD spreading apart, showing an increase in momentum. Daily chart, today's candles at kind of a renewed momentum. It just kind of, I think it comes down to, can it maintain that close up there? I think the temptation for me would be to take profits, but I know the Bitcoin holders out there just, buy Bitcoin, buy more, thank me later. That's all they really seem to say.
Well, even as a trader, though, I mean, I'm not a trader of Bitcoin. I'm an investor in Bitcoin. It's more of a long-term product for me, and I'm not getting rid of it here at 18,000. I'll tell you that. But as a trader, would I fault somebody for taking profits at 18K? Of course not. I'm not going to, chastise somebody on that. I would disagree with it, Matt. I would definitely.
I would chastise them.
Yeah.
Yeah. I mean, at this point, no, you're staring down the barrel at 20K. And no, you mentioned you don't know how long it's going to take. It's going to happen next Wednesday.
Yeah, by Wednesday. All right, I'm with you.
Yeah.
I mean,
and I say that tongue in cheek a little bit, but it wouldn't be shocking to me if I saw Bitcoin at 20K in the next week and a half.
I wouldn't be surprised if we saw it there by the end of this week. It's got that much momentum.
It's got a ton of momentum behind it. We've been all over this since literally the 10K, but specifically that 11,100 breakout. Every key component of this technical chart, we've nailed the triggers on it the entire way. And, there's, to me, I mean, if you're waking up to the Bitcoin chart today and you're asking yourself, do I take a trade? The answer is an overwhelming no, because you missed out on the trade. The trade was the breakout of 16,000. The trade was the snapback support bounce off 16,000. The trade was the consolidation breakout of 14,000. No, you don't chase the dragon of dreams of profitability. That never ends well for anybody. So if you feel the need to chase Bitcoin right now, it's because you have a little bit of greed in you, because you missed out on that trade from literally yesterday, and that trade from last week, and that trade from 2.5 weeks ago. So No, it's if you're waking up to Bitcoin, it's time for you to realize you're sitting on the sidelines right now, and you need to learn about Bitcoin.
Mm-hmm.
If you're waking up to Bitcoin, you're asking yourself, do you chase Bitcoin today? No, you chase education in the crypto space so you don't have to miss any of the trades in the future, because it's not the trade today that you should be asking yourself about. It's the trades over the last 3 weeks, or not even 3 weeks, 3 months that we've been talking about. So no, you don't chase it after something like this. That's just a rookie mistake over and over and over again. You realize, you know what? I missed out on this opportunity. I don't want to miss out on the next one. So I need to learn about this space, and I need to learn about technical triggers, which means you need to get into the step system and learn how to trade the step system so you don't have to miss out on these opportunities. And not only just in Bitcoin, but I mean, it just individual stocks, commodities, you name it. If you're missing out on here and you feel like there's an emotion there, put education first so you don't have to miss out on the next one.
Mm-hmm. And James in the chat is saying something I think a lot of people who did miss out on it are feeling right now. The FOMO is real. And
yeah, FOMO's real.
Yeah,
but you need to recognize it. You need to recognize if you're the FOMO. If you feel like you have this fear of missing out, it's probably because you did. But that doesn't mean you chase it, because like, think about it for a second. Psychologically, the fear of missing out, you're admitting you missed out on an opportunity. That's what you are psychologically admitting to, which means the opportunity, the timing for that opportunity is now gone. That FOMO should lead you to actually say, I'm going to put the education into this. And if you have put the education, you say, I'm going to put the time into this. I'm going to make this a priority so that I don't have to wake up 3 days later after just a massive home run and say, you know what, I'm going to chase it. No, you show up, you do your daily routine, you don't chase it. You just realize that fear is because you did miss out on an opportunity. Key word there, you missed out. You're not missing out. You missed out on an opportunity. So realize it. Let it reestablish itself. This trade, the aggressive trade above 16,000 that we talked about for weeks is already done. It's already done. But you know what? 2 weeks before that, not 2 weeks, a week and a half before that, there was a beautiful, beautiful breakout on Bitcoin.
Mm-hmm.
A beautiful, beautiful breakout on Bitcoin off a high base, tight ascending triangle, clean trigger right there above 14K. And you know what? There's going to be another, I'm going to say the quiet part out loud, guys. There's going to be another great trading opportunity on Bitcoin in the near future. It's
But
just
Matt,
not today.
if I don't buy now, I'm going to miss out on it.
I know, and that makes people lose a lot of money over time.
Yes, it does.
A lot of money over time.
Yeah, I get the emotion. I appreciate the breakdown from a mindset perspective.
I don't get the emotion. I don't. I know I'm on an island on this conversation, guys. I get it, and it's a sensitive conversation that people don't like to actually have conversations on. But I don't get I do not understand the fear of missing out. Opportunity exists literally every second of every day as in the financial world. Every second of every day. If you miss out on an opportunity, just realize you're part of millions upon millions upon millions of people who also miss out on opportunity every single day. Learn from it, recognize it, and go find that next opportunity. You know, if you miss a fastball down the middle of the plate, Tim, you don't go cry in your spilled milk.
Don't you just take your cleats off and
no, you choke up a little bit on the bat and you connect the next one. Yeah. That's what you do. You learn from it, you grow, and you take actions.
I love it. And some of those opportunities may be in individual stocks, and it doesn't have to be in one product or the other. That's why we have a complete approach to markets. And by the way, today, the most interesting news is in individual companies, which is kind of why we're working through the markets here from a top-down perspective pretty quickly, because I want to get to that news. I don't want to bury the lead anymore. Let's start with some of these stocks, and we'll punt on earnings. We'll get to those last. Let's give me Tesla if you can. I think we got to start right here. We've been talking about this for as long as I can remember in terms of Tesla being included included in the S&P 500 potentially. At least a year or two of speculation around that, Matt. There was rumors about it last quarter. They did finally last night. You even called me on the phone and said, hey, Tesla just got included in the S&P 500. And I think it's cool news. I think it's really big news for the company individually. We kind of knew at some point this was going to happen. We just didn't know when. Matt, the inclusion, they don't know if they're going to, kind of weight it in one or two times, but they're going to be doing it over the next couple of months and bring these into these index funds. Big news for Tesla. How do you feel about this one here, Matty, for Tesla?
Honestly, I think it is big news for Tesla, but it's big news we've been anticipating on Tesla for a very, very long time now. There's a lot of people that felt after the fourth consecutive quarter of profitability, Tesla was going to be included last quarter. That did not happen. The S&P decided to move in a different direction. And, I think now with what we're hearing out of the S&P, a little bit of that was just on, oh my goodness, how are we going to include Tesla? They're a really, really, really big company. And when you include it, I mean, it's a difficult, when you eliminate something and add something else, something the size of Tesla, you got to have some recategorizations of stuff. So, obviously that's something the S&P is looking at right now. And, whether or not they, include Tesla, the gigantic $500 billion market cap company that is Tesla these days. They might do it in one or two type rounds here, but I just, publicly congratulations to Elon Musk. That's a big deal. It's a big deal to be included into the S&P 500, and a company like Tesla with a lot of lovers and a lot of haters out there. I think this, I've always felt Tesla was a legitimate company, but I do think it legitimizes Tesla a little bit in the eyes of the marketplace, even though it was widely expected. Still put the cherry on the top there. So congratulations to Elon Musk, and congratulations to Tesla. It's a big deal, and you're seeing that in the price action today. Tesla's fading on the cash open a little bit as it's coming into overhead resistance, but you got to be looking at Tesla right now and saying positive on the news. Technically, let's see how it handles that resistance pivot. But give me a little bit of consolidation, maybe even a snapback retracement coming into perhaps some rising 9 moving average analysis. And then we might be looking at Tesla for the first time as a potential trade in the last couple months.
What are you seeing here in this chart? Because obviously that resistance zone is coming into play right away. It gapped right into it, sold off a little bit intraday from that. You do have the rising wedge in the moving averages like Matt's talking about. What are you seeing in the chart?
Well, mostly just that, like a breakout of the consolidation. Of course, it's news driven. You got a nice little spike. But that setup kind of prior to, the first thing I really see on it is just that consolidation triangle in there. And, those tend to lead to breakouts or breakdowns. You don't necessarily know which way. But now that it's kind of poking its head up above there, I like that. It'll be interesting to see if it can hold the gap or if the gap fills. But I usually take that kind of a breakout as a general buy signal. Now, today's candle being red, kind of backfilling on that, doesn't necessarily mean I buy today, but I would certainly consider it if it takes out the high and that resistance pivot. That's a pretty clean buy signal.
Mm-hmm. Yeah. Wherever that ends up happening, I don't know exactly what I would prefer. I might just like that consolidation for a week or so, Matt, and then get the breakout. I don't think I'd want to chase the momentum here.
No, I don't want to chase it.
No,
let it set up. It's kind of like we talked. Like it's anytime. I don't care if you're looking at the Bitcoin chart, Tesla, commodity, doesn't matter. When you look at something that's overextended in the short term that is not typical from a technical perspective, you got to wait and see. You got to wait and see how that's going to establish. And if we do have something legitimate on Tesla, it's gonna test that resistance breakout, and you can consolidate a little bit. You can retrace a little bit. But for me, everything on Tesla at this point starts with that magical horizontal line Noah has on the top level there.
Mm-hmm. And I don't know if they released what company's going to be replaced there. Dennis, I did not see it in the news.
I didn't see the news.
I think S&P Global said they'll release that at a later date.
Weren't they already under 500? Like they had dropped somebody.
They might have been. No,
they had a vacancy to fill, and they were just waiting for Elon to finish all of his pledge tasks.
Mm-hmm.
There might have been some of that too.
Yeah, yeah. Another big news actually out of Amazon. I saw this news this morning. It grabbed my attention. I even went in over coffee and talked to my daughter and my wife about it. I thought it was really cool. Amazon is now going to launch what they call Amazon Pharmacy, where if you've got a prescription drug, that you need delivered to your home, you can get it within a 2-day period. I think that Matt, you made a comment earlier I thought was really interesting, that the world in 2020 is just moving more towards online in a faster pace than we probably would have anticipated. If we look back at this year, a lot of this might be about this move to online business and online sales and delivery and all kinds of stuff. This thing for Amazon, for people who are stuck at home and need their prescription drugs delivered, probably a big bit of news for them here. The stock just jumped a little bit on the news. Noah, I'll get your read on the technicals here in a minute, but Matt, what's your take on this one? Because Amazon obviously expands into so many different areas of life and business, but I thought this was a pretty cool thing.
It's Amazon. They, like you said, they expand into every single aspect of it. And I forget the company they acquired a couple of years ago, some pharmaceutical company. And so this was not something that was in our recent memory of, oh, Amazon's looking to do this. But Amazon did acquire a company a couple of years ago for this purpose. So I don't think it's too shocking for the market. I think it's just, par for the course with Amazon, to be perfectly honest with you.
Mm-hmm. Yeah. Noah, what are you seeing in the chart? I mean, long consolidation here,
Yeah,
pretty
just
messy.
consolidation inside. That's a tough one for me to trade, other than like doing something non-aggressive, like selling like credit spreads way down below support type thing. But I think there's upside potential in general, and it's above the moving averages, but it's still so inside those previous ranges. Just makes me want to draw another triangle. That's all. It's all. I can't help it. I have to do it, Tim. I gotta actually. It's like leaving a thought unexpressed or a sentence unfinished. It's just like I think it's gonna continue to consolidate and then break.
Mm-hmm. Weekly chart if you can, because those breaks, obviously long consolidations that last months and months and months on the daily. I'm not sure if the triangle break will be the signal. It depends on how it develops over the next month or so, but it needs some clarity before there's a trade here, right? Is that the basic sentiment?
Basically, and again, unless it's something like, cash flow trade type scenario down below support, because I don't necessarily see it dropping. I think it's got enough, general strength and market strength to keep it buoyed up. Plus, that kind of news certainly doesn't hurt it. One of the people in the chat mentioned that Walgreens and CVS are getting crushed on the news. So that could be a pairs trade type idea. Maybe bullish Amazon, bearish on those. Would be an interesting idea to play with, but also, you do have that potential for fourth quarter, spending, and we got Cyber Monday coming up soon. So reasons to maybe be long on Amazon in some fashion, but no, I need better signals.
Well, I don't think investors are going to come off of anything here. Obviously, they probably just believe in Amazon. They love the company, so I don't see anything there. Traders just kind of playing holiday sales. I think there might be better areas to play from a technical perspective, get clarity out of it until we get a better chart on Amazon. Is the way I would see it. Facebook next, if we can. Facebook and Twitter, both CEOs are, doing a Zoom call again. Matt, you're going to hear this headline a lot in the next couple of years. We already know it. We've heard it a lot in the last couple of years. The Senate is going to have a hearing with these two. They're doing it right now live while we're doing this halftime report on censorship suppression in the 2020 election. They're expecting to take, conversation and questions around that Section 230 that's been so hotly debated. The stocks aren't really moving on this news here at all. Matt, when you see these news stories in the headline, to me, they're kind of a non-story. What's your take on it? I mean, is there any risk for these companies getting in front of the Senate right now?
Tim, I'm sure this has happened to you as well many times, but have you ever gotten to the point where there's just like you're hearing a tune in your head nonstop?
Mm-hmm.
Like there's just like an album you like or a song you like or something along those lines. Right. So you like John Denver?
I love John Denver.
John Denver, right?
Yeah.
John Denver's good, right?
Mm-hmm.
So I've been singing On the Road Again all morning long because I can't get out. I can't stop singing On the Hill Again. Facebook can't wait to get on the hill again.
Isn't that Willie Nelson?
Oh yeah, it's Willie Nelson. It's not John Denver. I can't. Why am I thinking John
man,
Denver?
did
John
they ever
Denver
perform
had a
duets?
song called "On the Road," but you're thinking, yeah, he did have a
Yeah.
song
Okay. So
titled
that
On-
is Willie. It's Willie
It
Nelson
is
though. Who I'm
Willie
thinking
though that
about.
you're thinking about. Yep.
But
But they
I
were
mean,
both Rocky Mountain High, so
they were both Rocky
yeah.
Mountain
I
High.
see
There's no
what you
doubt
did
about
there.
that. Yeah. That was pre Denver Denver marijuana as well. But
Yeah.
so I guess I just don't care, honestly, because they were on the Hill literally 3 weeks ago,
Mhm.
and they're going to be on the Hill 3 weeks from now. And I know what the Republicans are going to scream at them about, and I know what the Democrats are going to scream at them about, and I think the market doesn't care. And so I think based on the theme we've been discussing over the last couple of weeks, I don't think you're with the divided Congress. I don't think you're going to see any actual regulations coming on Twitter or Facebook. And again, it's one of these unique, amazing things where Facebook and Twitter are uniquely hated by everybody in America from a political perspective. Democrats, independents, Republicans, they're disliked for different reasons. And it's going to be, even though Republicans and Democrats can agree on, Twitter and Facebook, that there's a problem we have to have a conversation on as a society, they can't agree on what that problem is. And so if you can't identify what the problem is, it's really hard to come up with solutions. And so I don't care that Facebook and Twitter are on the Hill again. That doesn't, right? What's going to happen to these companies? At this point in the game, all these congressional hearings are a chance for Republicans and Democrats to get out their talking points.
Yeah.
That's all it is. And all you have to do is just watch one of these hearings. Just watch one time when Jack Dorsey and Mark Zuckerberg are on the Hill getting grilled by Congress, and you'll quickly see this has nothing to do with actual regulations and everything to do with just political talking points. And so, they're on the Hill a lot. They'll be on the Hill more, but I don't see any scenario where you actually get some degree of, regulatory regulations that come on this, because I don't believe the political environment, in this political environment, we will come to some type of an agreement on what the actual problem within the social media space is. I think everybody in society can agree there's a problem. Can we all agree there's a problem?
Right, left, and center, I think.
Right, left, and center.
Yeah.
We can all agree there's a problem. But then discuss what the problem is, and you will have a vast difference of opinion.
Well, it's not the problem. It's what's the solution. I feel like most people get
Hold on. No. There is no reason to talk about a solution, Cody, if you can't identify a problem.
Also true.
So I just don't think we're ever going to get to the point of talking about what the actual solution is if we can't actually have a conversation as Americans on identifying what the actual problem is. And so, yes, again, these companies are going to be on the Hill a lot, but I don't think we should overreact to any of these headlines that come from these social media giants and these media conglomerates when they're on the Hill. Usually, typically, guys, when companies on the Hill facing political eyes, that's a stay away, right? You want to stay away. They don't bring you to the Hill to talk about the good things, right? They bring you to the Hill to talk about the bad things. And so that's typically, hey, listen, whenever healthcare is on the Hill, and again, the Hill is in Congress, whenever healthcare is on the agenda, it's like, stay away, just stay away. But I don't think you can say the same thing about Facebook or Twitter in these environments, because again, I just don't believe you're ever going to have a point where we actually have a legit conversation without everybody getting offended about social media.
There's several thoughts in my head right now. One of them is now you've put On the Road again in my brain. It's going to be playing on a loop for the next 2 hours. So Willie Nelson, there is not a bad thing about that, Matt. I don't have a problem with that, but it will be in my brain. Now we're putting lyrics to this, on the Hill again, on the Hill again. Just can't wait to get on the Hill again. We need Mark here to do a little mashup on a song. But most importantly, though, is the market doesn't care about this. Look at the chart. Literally, I mean, this is, big news maybe from.
Which one are we looking at, Tim? I was too busy disclaiming things on the chat.
Yeah.
Oh, I see.
Noah
But
wears
no,
pink underwear,
I
apparently.
think we see Noah's bias in the conversation in the chat.
Well,
But
you know,
that's
it's
my point. We're never
technically
going to agree on
it's
the
red,
problem.
Dina, but you know,
yeah.
it's close enough.
Lad, it's
Or
pink
they're
if you
they're just
wash it
faded.
enough.
They're faded.
Noah wears pink underwear. Are those the neat
Don't go on it. It's not,
sexy shorts?
you don't need to go on it. It's just a chat thing, Tim.
We can
You don't
come
need-
back to Donkey Kong here in a minute. I do want to look
Yeah.
at that chart. I thought it was an interesting rally off these lows. But back on Twitter and Facebook, Noah, because I guess my point is as well. And Matt, I'm with you. They were there 3 weeks. They'll be there again in 3 weeks probably, and they'll be there probably 8 times next year. Markets
Yeah.
don't seem to care about this right now because there's not any
Over under.
out of it.
Okay, over under. Will we have more Fed meetings next year or Mark Zuckerberg on the Hill appearances next year?
Mm.
We know how many Fed meetings we get. We
You
get
get
8.
fed. You get fed emergency meetings
No,
sometimes.
Just we're going
Call it
8.
8.
We're going 8. We're going the official meetings, 8 meetings.
I'm going to say under.
I'm gonna say over. I think
All right.
Zuckerberg's on the Hill more than 8 times next year.
Yeah, it wouldn't surprise me. I think it's a good line. I think it's pretty close. That's about every 6 weeks, So every 6 weeks, having another appearance talking about something or the other would not shock me.
You got to realize these Hill meetings are not like Zuckerberg. You got to get on a plane and go to DC. There's like, hey, let's have a Zoom meeting. Can you send me the link, bro? That's a congressional hearing these days.
Don't turn my chat into a Twitter thread, by the way. This is what is the madness going on over here?
I've really
This is
enjoyed
fun.
this claim is disputed things that people are posting all over, just making fun of it because it's so bad, but the jokes are so good.
Well, I mean, there's probably more analysis around the humor of it than actually the market response. Noah, can you give me, a read on these 2 charts?
Well, yeah, I think Facebook is just neutral. Like post earnings, it just gapped up, filled its gap, came right back into the middle, and just smack dab in the middle of support and resistance. And so I don't, it's got a general bullish bias, obviously, but pretty
Is
neutral.
there a trade
otherwise.
there? Is there a potential trade here?
For me, it'd be more like a cash flow trade down below support, like credit spread. I don't have a really strong directional read on it. Would have to start. I think it have to go up and take out that 300 zone for me to get real bullish on it.
Mm-hmm. Matt, what about you on this one? Because I see an interesting pattern. I mean, and part of the reason I ask is because their earnings was really strong. Matt, when you broke that down a couple of weeks ago, it was one of the companies came out and did very, very well, even before the election. Is there a trade here, or do you want more clarity?
I'm not looking at Facebook here. I don't think Facebook fits kind of the theme I've laid out, and that theme is kind of my own bias. So, in terms of looking at Facebook, no, I don't think that going on the Hill represents a risk to Zuck or Facebook, but I do have it underperforming the broader market right now.
Let me see. Twitter next, if you can, Noah. Give me a quick read on that chart too.
I like the Twitter setup from our previous scouting report last week, and it's kind of just hanging out in there. It hasn't really given up on the drop yet, just kind of whipsawing inside them. It's still down below those. Yeah.
I have a question for you on the Twitter chart.
Yeah.
So, I got this as, obviously you got to break down off the earnings gap from last week. You had the snapback retracement that, came back into those, I believe that's the 50-day moving average as well. The 9 EMA caught up to it, but, and maybe this isn't a question specifically on this chart setup, but just these type of patterns in general. When you see a bearish retracement like on Twitter, and I think you can say the same thing for a bullish retracement, but when it doesn't do that V-shaped confirmation that we like to see, but instead it does this rounding top, right?
Yep.
This rounding bottom, does that change the analysis for you at all? Because last week I felt like this was a really good trade, and I still like it, but not as confident.
Yeah, I mean, the initial drop was really great. Like there's off of that signal candle. I mean, good solid drop, and then it just kind of consolidated, and they're kind of giving it that rounding top you're referring to. And all of that really makes me want to know. Like you can notice, I happen to have a bracket order on this from just showing that off in one of our coaches shows. I just tighten up the stop a little bit, and that's about all I would do, and say, yeah, okay, my confidence is waning a bit. It's still got lower high, even though today's candle is green. It's the high still lower than the previous day, still lower than up here, and the low is been a little touch lower. I might break that down into the intraday chart and look at it from, where did I have that 30-minute chart, and just kind of watch it from here. Like, okay, is it going to take out resistance or is it going to take out support? It's got, following moving average. Otherwise, a couple lower highs. That's all I really see, and a couple higher lows. So inside consolidation, it could break either way.
By the way, a couple questions in chat I don't want to miss before we go too far down the road here. Move on from Twitter. Bring up Donkey Kong if you can. Kane Doe, who's a regular halftime crew member, asked a couple of times for us to look at this. Definitely want to do that for Kane. Can we go over DKNG, thinking about placing puts with the new lockdown and rising COVID? Can we please go over Donkey Kong? It looks so bullish and foolish. I'm thinking about putting puts on for the next week. California raises to purple for her COVID. Many states are also closing again. Kane, obviously when it comes to price action relative to what's happening with COVID and restrictions and all that kind of stuff, there may be some speculation there. I'm just seeing strength in the chart though. One thing that you want to do if you're a student of markets, you're new to the markets, all that kind of stuff in your first couple of years, learn to trade what you see. It's so tough when you don't believe in a premise and you start seeing price action moving against you, either up or down, by the way. Let's say you're really bullish and it's going down. You're like, I don't believe that. Or you're bearish and it's going up. I don't believe that. Problem is, Matt, the market is now rallying post earnings and off of these lows here. And now it's actually threatening a breakout. Matt, what are your thoughts for Kane out there? He's thinking about betting against this upward move on DKNG.
Betting against the upward move on lockdown analysis. Kane, the market is starting to realize lockdown analysis is not as disastrous as, say, what we initially thought it was going to be. And I don't personally believe we're in front of national lockdowns. I also believe any degree of lockdowns will be municipality or local, statewide issues. And I just feel like a lot of states in the last week and a half, 2 weeks, are kind of showing the plan with that. I can just kind of talk to you about the state of Utah and what the state of Utah are doing. We have some of the most restrictive policies out there in the US right now. And the simple reality is we're not shutting down businesses. And so I do not think the theme that is developing in the market would be a negative to DraftKings. From that perspective. So I don't think you would actually get support from a price action perspective based on your opinion on lockdowns. I don't think that would support it. Could you support a short position a little bit more from a fundamental perspective? Maybe, but we've seen how those fundamental shorts have played out in the last 10 years and specifically in the last 6 to 8 months. And then from a price action perspective, I think you're looking at this and you're looking at DraftKings and you're saying, I personally can, and I can just talk to you about what I'm personally looking at here, but I don't see a short here. I think you're fighting against the theme that's being adopted in the market. I think you're fighting a little bit of the analysis from earlier this year, where lockdowns were seen as very, very, very negative economically. And there was a lot of analysis earlier this year regarding DraftKings when we had lockdown analysis that, they were going to shut down sports. They were going to shut down this. They were going to shut down that. But DraftKings wasn't really negatively impact based on that, because what did we see? We saw, Major League Baseball, despite outbreaks, still put on baseball. What you see with the NFL? You saw the NFL continue to put. I think leagues out there are starting to figure out how to work around this virus to a certain extent. So I don't think the analysis would actually support a short on DraftKings. Now, the concern with DraftKings in that environment might be a stay away from DraftKings, but I'm personally looking at DraftKings on the long side, not the short side. I could be wrong. As a trader, we're always, we're wrong a lot, guys. We're wrong a lot. But I just don't believe the analysis that is being adopted in the market right now would fit that analysis in a short on DraftKings, because I just don't feel like lockdowns at this point. I feel like the market is starting to understand how lockdowns actually work. And so lockdowns, the word lockdown triggers us psychologically. It does. The word lockdown triggers us emotionally from a political perspective, because it's been a political talking point for the last 6 months. But I do believe when we're talking about lockdowns, we're talking about it from a market perspective about the regulations that are being put in place. I'm not sure if anybody really expects a national lockdown at this point. I certainly do not expect a national lockdown at this point. I think in there will be certain areas of the U.S. that will have priority order, no doubt, but I don't see something nationally to the point where it would, impact the underlying fundamentals so horribly on DraftKings that we're thinking that this is an obvious short. And so a little bit of a longer-winded answer there, but I just don't feel like the analysis supports a short here on DraftKings. I think there's better shorts in the market right now.
And quite frankly, and very bluntly, I think the market is just not looking at COVID data or COVID restrictions or any of that stuff in the short term, because there's this underlying premise, Matt, with the positive vaccine news last couple of weeks. We're going to get through this period, and eventually we're going to come out of it. The market's thinking 6 months and forward.
I honestly do, and I've said this before on the halftime show, but it's sometimes really, really hard because we look at the situation in our everyday life, and we have our beer goggles on to a certain extent when we're looking at things from our own perspective. But you look at the situation in our everyday lives, and it's kind of it's a little scary out there, right? And you think, well, why does the market not care about this? I care about this so much. Why does the market not care about this, right? And it's like, well, you got to understand the way the market thinks. The market doesn't have a opinion one way or the other on it. The market is looking right now, and they're forward projecting vaccine in 4 to 6 months. The theme that is being adopted is a pro-economic theme in the marketplace. We'll wait to see if that actually plays out, but that is the theme that's being adopted in the marketplace. In the market, because they have they're adapting this theme of 4 to 6 months out right now, and they've done this in the past, right? We've been doing this for 6 months now. So this should not be anything that new to people in the marketplace, but the market is looking at this for 4 to 6 months down the road. And they're saying, you know what, we're going to see some nasty stuff in the short term, but we are going to have a workable vaccine, and we're going to get back to business as usual at some point in 2021. And so whether or not they're right, I don't know. They've been wrong on their time frame so far throughout the last 6 months. They haven't been right on a whole lot of things. But I'm speaking about what's important to the market, and right now the market discounts negative analysis.
By the way, DraftKings got initiated as a buy at one of the firms today, Loop Capital, I believe, and they stuck a $100 price target on that. I don't know where they got that, Matt, but obviously
they made it up.
Commentary, yeah, it's a round number, I guess.
Yeah, they made it up. I mean, yeah.
Yeah, $100.
So Tim, there's a comment in the chat that I think is worth noting. We got a new visitor today that was asking about cash flow trades because we were talking about them. I just thought it'd be nice to recognize that they're here. Let me see if I can find the name again. Where did they go?
Trong.
Yeah.
Yeah, Trong Trandine, welcome. Hi, I'm new to the channel. You guys mentioned cash flow trades. What does that mean? Noah, how do you answer that?
Well, it's in learning how to sell options for income. High probability trades where you're selling way out of the money options. There's a handful of strategies you can do it with, things like naked puts, owning a stock and selling covered calls on it, or credit spreads, which is basically selling one option and buying another option and leaving yourself with a net credit. Well, we don't necessarily have to pick the direction the stock goes. We can simply bet on a probability of it staying above a certain price point. And once you learn about cash flow trading and investing, I think it changes the way you think about money. I think it changes the way you think about investing in the markets. And the more you learn about it, I think just the better equipped you will be to actually generate some cash flow out of the market with some consistency.
Yeah, go to the website if you can there, Noah. A couple things that I would point you towards, right here. Anything is strong. Hopefully I'm saying that right. Go to the playbook, Noah. So Tron, one thing that we do at Tackle Trading, we do this show each and every day where we break down the markets one step at a time. Our halftime crew, they come and they join us. We analyze things. We have conversations, all that kind of stuff. On the back end of our website for our pro membership, we have all kinds of different things. Courses, a playbook. I particularly love the playbook.
Oh,
Trade Center.
Relax. I'm just making sure I'm logged in.
Yeah.
You're taking your time though. I just wanted to help you
I
out.
was
make
showing
sure
the
you knew.
15-day free trial at the bottom of the main page.
Cody, no side seat driving. All right. He will get there when he gets there. All right. No, the playbook here, there's a section on theta that we designed. We built videos around that kind of teaches some of the cash flow techniques. And we usually label those as theta strategies, and those techniques. The naked put is a really popular one, and the covered call. I would start with those two. There's actually, I wrote the Tackle Today blog on naked puts. There's a video, Noah, you did last week on how to roll a naked put out and up. I put that in the video of the day here today because I thought it was really good. But there's also courses on it, like the Tackle 25. But yeah, we've got a lot of education on the back end. And that's what we're referring to when we're talking about cash flow techniques. They're a type of strategy that have positive time decay as a basis for how you make money. So, and welcome. Make sure you subscribe, click the bell, and come back and join us every day. Let's move on to the next one here. Costco, if you can, Noah. Now, Costco came out and they announced a cash dividend of $10 per share. Stock jumped up a little bit on this. Obviously, and the CEO's comment, our strong balance sheet allows us to pay this dividend while preserving financial and operational flexibility to continue to grow our business globally. And then he went on and on and on about how strong he feels his company is in this position right now. Matt, when you hear companies announce dividends like this, does this just kind of give you more confidence around the company, in the long term, short term? What's your read on news like this?
Honestly, don't have a lot of analysis on it, to be honest. It's positive. It's not negative, but that's all I really have to say on it, Tim. I don't have any detailed analysis. I'm sorry. I'm answering questions in chat.
No problem. What do you got in the chart there, Noah? Little triple top kind of developing.
Mostly I see upward momentum and higher lows testing resistance, but you do have those three tops out there in that area. So that becomes a price level you got to pay attention to. And I'd call it 385-ish ballpark, where it's this little zip code where it's been resistance once. It's acted as resistance twice with that big bearish engulfing candle. And I don't know what news was driving that, or if that was just purely technical. I'd have to go back and look. But here it is recovering, coming back up, even gapping up on that news, and that $10. Wow, that's amazing. I don't know if you could still get that or not.
That candle was the day of the Pfizer news where half the market went crazy to the upside and the other half
went down. Yeah. Oh, is that all it was? And again, here you just see the price gap up and you're seeing a red candle inside that same resistance zone. So basically all it means is it's a price point where people have been selling, but if demand exceeds the supply, you'll see prices rise and break out above that 389, call it 390s, price point. And I like that. And anytime you kind of see a double bottom or W type pattern and you get a breakout, that can be a decent little buy if you go back and look at the number of times it's hit those double bottoms and then broken out. Common pattern. I like it in general. There's a seasonal play here still for the Santa Claus rally. They do have earnings. And one of the patterns we've noticed, over recent quarters has been the run up to earnings where people, again, normally we say, hey, if in doubt, sit it out for earnings, but there's been a tendency for stock charts to run up in anticipation of earnings. And it's not, not across the board, but it's just a pattern that I've seen more and more stocks in the week or so, prior to earnings, the price running up.
Mm-hmm, mm-hmm. All right. Last area, and actually I do want to get to some upgrades. I thought that was interesting what companies got upgraded here, but I want to get to earnings before we do that, Matt. There were three companies that reported earnings here that were notable in my opinion: Walmart, Home Depot, and Baidu. I know you grabbed some of the numbers around those. Where do you want to start with those?
Yeah, let's just quickly start here with Home Depot. And we'll jump to Walmart very quickly. I just had Home Depot on my notes first. But Home Depot here reports earnings of $3.18 a share versus expectation of $3.08. $33.5 billion against the expectation of $31.4 billion on the revenue. 23.2% year-over-year increase in revenue and 24% increase in comparable stores. I'll just put my analysis very simple on both Walmart and Home Depot so far. Fine, okay, boring, nothing really to see here in my opinion on their earnings numbers. I think by honestly by later this week nobody will remember Home Depot and Walmart reported earnings this week. Mm-hmm. They're just really boring numbers.
They're boring numbers and not much of a market response, even down 3%. That's within the market maker move. And then Walmart here, I mean, it didn't
really. I mean, with Home Depot, obviously it was a big pandemic play, right? Where everybody's staying at home, work at home projects, those repair jobs that, we've all been putting off for the last few years. We all decided to do in March and April of this year. So it was a real big boom. But Home Depot, Lowe's kind of been stuck in a range over the course of the last few months, 3 months. I think if you're looking at those, I mean, very popular investing names is Home Depot. Obviously you're not concerned about Home Depot from a long-term investing perspective, but while it's in neutrality, you're looking at selling calls to cash flow on that. And then obviously you could care less about anything as a trader, adding to, contracting from, position, type analysis until Home Depot breaks out one way or the other. Real tight range, not tight range, but a fairly decent range between 260 and 290. Let us say neutral, cash flow while it's neutral. And if it ever breaks out, as an investor, you're celebrating. If it breaks out of that 290, as a trader, if you're looking at Home Depot, you're looking at it at that point. So, but the raw numbers today were fairly boring, but that's good for Home Depot sometimes. Walmart came in at $1.34 a share versus the expectation of $1.19 a share. Walmart came in at 5.2% increase. Again, we're talking Walmart here. We're not talking, high flying tech stock. We're talking boring Walmart, and Walmart was boring. What was not boring about Walmart, and what is something that I feel Walmart, and I've spoke about this on the halftime report before, but I feel Walmart's done a fantastic job in the last 5 to 6 years in really embracing online. And my God, how important of a decision that was. And that's why leadership in companies is so important. Walmart got a new CEO back in 13 and 14, and they really wanted to focus on their brand image. They wanted to focus on, refurbishing the old Walmarts to increase the Walmart experience. They wanted to focus on, online sales and the neighborhood Walmarts, and putting in that plan of action, because Walmart got stale. Putting in that plan of action. Nobody can anticipate something like a pandemic in 2020, but those decisions Walmart made over the last 5 years really benefited Walmart coming into 2020. We all know the transition to online is now happening faster and faster and faster. And the reason I bring this up is the one point in Walmart's report that I felt like it was a really boring report. Like, I mean, that's just what it was. And yeah, Blake, I do agree with that. Walmart always had a little bit more better brand image than Kmart, no doubt. But for those, 80s kids like I was, and 90s kids, right? We remember Kmart. We remember Kmart. But I would say Walmart was a little bigger brand, but obviously that path to online did avoid a fate of it becoming a nothing burger. And so I do agree with that to a certain extent, Blake. And it was a wonderful decision. And today, the only number in the report that I look at, I'm like, wow, that's a really good number, is their e-commerce business. 79% increase in e-commerce business in a very short time frame. That is an amazing number. And that is something that you can look at and be like, yeah, that is a really good number, especially moving on into the future where online shopping is going to be. Guys, what happened in 2020 is not, I mean, the things that are changing, it's not new. It's just speeding up the evolution of everything from a physical to a digital perspective. And so Walmart embracing online 5-6 years ago really paid dividends in 2020. And so when you invest in a company, just think about that, guys. Think about those companies that have, visionary type leaders out there that are always thinking about where the economy is, where the market is, where consumers' buying decisions are, how behavioral analysis is changing in the face of the Fed and the Fed's evolution over the last 15 years. Think about when you're investing in companies, and because you're not just investing in the company, you're investing in the leadership, you're investing in the ownership. And so when you look at Apple, for example, and Tim Cook, you're like, yeah, I have a lot of confidence in Apple because Tim Cook's a marketing wizard. No, he's not the research and design expert genius that Steve Jobs was, but he's a marketing wizard. You're investing in that to a certain extent. So I like what Walmart did, and you got to support, you got to celebrate their decision a little bit, especially today. I guarantee you, executives of Walmart today are looking at this saying 79% growth in e-commerce, 6.4% increase in comparable stores. It doesn't take a rocket science to look at those two numbers and say where we're going to focus our business.
Yeah, and I've been really impressed with their CEO as well. Doug McMillan had a quote out of the earnings report today regarding the e-commerce sales. Matt, he says, "We think these new customer behaviors will largely persist, and we're well positioned to serve customers with the value and experience they're looking for."
I think he's got the finger on the pulse there, Tim. I think these consumer behaviors, and I've talked about it in the halftime report, consumer behavior is changing post-pandemic, and it's those companies that have their finger on the pulse of that ever-changing consumer behavior, because we know how important consumers are to this marketplace, and specifically retail sales, consumer spending, consumer confidence, and so on and so forth. You know, so I think Walmart's got their finger on the pulse there. I like this company, and man, 5 years ago, if you were going to ask me about Walmart, I'd be like, I hate that company. It's a filthy place. I never like going. I drive by it and I just want to go to a Whole Foods. Today, I'm like, yeah, let's go to Walmart.
Let's go to Walmart. It's fine. Yeah, I like what they're doing with their employees too.
Yeah.
Yeah, no, I've been a fan the last few years, and it really did coincide with that new CEO. Leadership matters.
Now, I will say this: I still enjoy the neighborhood Walmarts and not the super Walmart. That place is a nightmare.
I still got to try the pickup thing that Mark uses all the time.
Mark loves it.
He does love it. All right, last one, Matt. Baidu.
Last one, Baidu. Technically, very quickly on Walmart. Technically, you know, just playing defense right north of that 150 level. Do you see anything here, or do you just need a little bit more time to let it set up?
A little more time. It's kind of range up in the short term. It's had a really good run, which is about as big of a run as you'll normally see on Walmart before you see a consolidation or pullback. But the fact that it's poked up to a new high, that's something the bulls like to see. So for sure.
Mm-hmm. Yeah. Baidu, last one here. Man, I will tell you, when we get done with the earnings season, I just get so happy. I mean, just so happy. Like I only wanted to do Home Depot and Walmart, and Coach Tim's like, yeah, but don't you need at least 3? I'm like, no, why do I need 3? No, well, fine, Baidu. So let's do Baidu. But I get so happy when earnings season is done here. $3 out of all the earnings report, Baidu had the best raw numbers here. Baidu $3 versus $2.07, really decent beat on EPS numbers, 4.2 billion versus 3.9 billion. I got nothing else to say other than keep an eye on 150, and if we ever do close above 150, you should see some momentum above that level.
Yeah. No, anything in the chart grabbing your attention?
Other than these 2 shadows on the most recent pop up above resistance, long shadow kind of smacking it back down.
Crazy train. Ozzy Osbourne.
Yeah, today's price action, you know, whipsawing down and seeing it come back up with a long lower shadow. So that kind of puts it back into the neutral zone. But overall, I think in an upward context, and I like the recovery with today's long lower shadow. And I could see some bullish activity out of this. But the hard part on a chart like that is like, where do you trigger? Where you can put a stop loss. Like I would probably consider, you know, putting stop losses below the base, down below the candles. But I mean, are you confident triggering right above a candle high? Or you want to wait to see if it can get out here and close above 150? You know, that's a tougher call, but overall it's kind of bull flag-ish, and that whipsaw kind of makes it an entry and exit tough.
Mm-hmm, mm-hmm.
I've just personally found trading Baidu as a stop loss management nightmare.
It is.
That you just constantly get wicked out. Even you're right on the analysis and you still don't make money.
Mm-hmm. Yeah, I think it's more of a position trader with a different kind of plan. Yeah. Lastly, I got some upgrades.
I think you could say that a lot about a lot of international companies, though.
Mm-hmm. Yeah, especially just the way they trade, the nature of them. I agree with that. Tell me if you spot a theme here with the upgrades today, Matt. Let's go through them pretty quick. Noah, I'm going to give you all of them. Then I'm going to get your reaction, guys. RBC upgraded Chevron to a sector.
They're chasing energy.
They're chasing energy here.
Chasing energy.
Okay. Telsey upgraded Home Depot to outperform from market perform. That's probably just an earnings release. They must have liked something they saw in there.
That's also a massive mistake.
I think it's a mistake on that,
Yeah.
that as well. Jeffries initiated
And
Southwest.
I like Home Depot a lot as a company. That's a bad analyst. They should be fired.
It's neutral.
That is not a hard call to make.
Yeah,
My 11-year-old could make that call. That's an analyst just trying to get his name out there. Fire him. They're not a good analyst. Fire them.
That's a neutral chart. No question about it.
Yeah, it's not a hard call.
LUV got initiated as a buy at Jeffries, so an airline. Allstate and Travelers, two insurance companies, ALL and TRV, got initiated as overweight by Barclays. And Citi upgraded Schwab, a broker, SCHW, to buy from neutral. Matt, I'm seeing bank, brokerage account, insurance company, an airline,
fits the theme.
And an energy stock all getting upgraded here. I expect we're going to see more of this from analysts as we move forward.
You are going to start to see more and more of that as that does fit the theme that we've played out here in the last 2 weeks. So, just think about this as the early upgrades that we started seeing in May after massive price appreciation in the tech space when they were upgrading Zoom and Peloton and all those, high flying stocks, blue chip stocks as well, as they were just chasing the dragon. I think you're going to see a little bit of that with the banks over the next month or 2 months as they chase this theme developing a little bit as well.
Yeah, I think that's exactly what's going to happen. All right, guys, that's what I got here for today from a news perspective. Obviously, we love coming in here, breaking down all the news, the information, the analysis. We're going to go into some final thoughts here shortly. Just kind of as we're talking about the market, and go back on the S&P if you can here, Noah, as we finish up this show on a Tuesday. Noah, I'm going to let you go first here, just kind of from, speaking to our audience out there, talking to Team Tackle. What are your final thoughts?
Well, I think it's safe to kind of maintain that cautiously bullish outlook. Markets, right there close to these all-time highs. I think there's a good case for the bulls, and there's always that fear and uncertainty of, market putting in a quick correction. But that's what, stop losses and proper position sizing and things are for, to help you protect. I think it's just one of those things, kind of watching, waiting, but I love the fact that it's out here by these new highs.
Mm-hmm. Matt? Final thoughts.
Airbnb, one of those big names out there, massive brand awareness. They filed to go public here, and it's going to be under the symbol what is it?
I think it was like
ABNB.
ABNB,
I believe it is. Yeah, it's ABNB. I can't read my own handwriting there.
Have they actually gone live?
No. Filed for it. For it.
Okay.
So it should be, it's going to be fairly soon. Going to be an interesting IPO to watch, obviously, something that one of those IPOs that everybody will be talking about, one of those IPOs that will see a high fly, probably a high flyer on the IPO, meaning that does not mean just up, guys. High volatility is what I'm talking about there. But I do have some interest here, and I don't think I would have had interest in Airbnb pre-pandemic. I mean, during the early stages of the pandemic, just with overall concern. But I do have a little bit of interest here on Airbnb. It's a business model I think fits the evolution of our economic systems over the course of the last 20 years and moving on into the next 20 years. I don't see Airbnb even remotely similar to how we saw WeWork, which was the disaster dumpster fire from last year, where SoftBank lost billions upon billions of dollars. And even though I'm not going to be doing anything on the IPO, because I just never do anything on any IPO, it is an IPO I'm going to be looking at and watching and tracking. So just keep that on your radar, guys. Airbnb, it's going to be a pretty popular IPO that comes out in the near term.
Yeah, and they even announced that they did turn a slight profit.
Yeah, they show profit post-pandemic, Tim.
Yeah.
Post-pandemic, all the problems Airbnb has, in a pandemic, they showed a profit. Maybe Uber should hire their CEO.
Well, and I don't know when they IPO, Matt. Are they trying to do this pretty soon?
I don't know.
or
I didn't get the date.
Yeah.
I'm assuming it's fairly soon though.
within the next little bit?
These don't take long. So
Yep.
I'm
Yep.
assuming once the IPO gets filed, it happens fairly quickly.
And,
They might actually have a date on it already. I just didn't see it in the headlines today.
mhm. And my final thought's very simple here, guys. We appreciate you guys out there. Hashtag Team Tackle. The community is pretty awesome. Seeing that new member come in here earlier, and you guys answering the questions in the chat, engaging, and really helping him out and making them very familiar with what tackle trading is all about. I thought it was awesome. Noah, Matt, appreciate you guys answering those questions and giving those thorough, bits of analysis and insight. We love our community. We love our new members. We love our old members that have been around for a long time. If there's anything that you need from us, you let us know. Team@tackletrading.com. We're happy to help you. And by the way, if you're not yet a pro member, most of what we do at Tackle Trading is over in our pro membership. And we love our YouTube channel. We come here every day to provide insight and analysis.
There's a dabbing meme. I know you're doing your end routine here, but there's a meme that has a dab. The dab.
I have no idea what you're talking about. No.
The dab.
The dab. You don't know what the dab is?
Not a dab.
Is it a dance?
It's a dance move.
Are you serious? Cam Newton was on your fantasy team for like 5 straight years.
I don't know what the dab is. No.
Okay.
I have to plead ignorance. The first image I got is
you are the oldest 80-year-old in the history of mankind.
Like, is it the Macarena? Like, what are we talking about here?
You should stop talking.
Oh no, I must be an old man that's not kept up on social media. So sure, I'll have to eat that one. I'll eat crow on that one, no problem. I'll go look it up.
You shouldn't.
Not Tim lost again. No, Roberto. I'm glad you brought that up, Matt.
I don't have anything to say right now. I'm done talking.
There's one thing that you're going to have to say. Bring up the podcast if you can.
I don't know if I can after you not knowing what a dab is. I mean, I just don't understand it.
Noah, Trading Justice.
You literally had Cam Newton on your fantasy team for 5 consecutive years in a row. It's one of your most loved NFL players. And I don't understand. I love you, bro. I love you so much. That's all I can say right now.
I'm an old man. We had a wonderful podcast yesterday, and if you haven't listened to it yet, I'm not going to spoil anything here. But Matt, you and I, we're going to be having a conversation about the game on the podcast at some point here in the future. I'm going to expect some clarity on a couple of the rules that happened.
No, somehow you just found a way to lose even more today. So no, absolutely not. No, we had fun. We had a fun little podcast yesterday. We did our normal skyline. Had Coach Tyler Craig there. Really, really enjoyable. And Tyler, if you guys have not read Tyler's newsletter at Trading Justice this month, you're missing out. Kind of like you missed out on the Bitcoin trade. You're missing out. Get over there, read that newsletter, share it with a friend who has interest in the financial world. It's that good. And I said this on Twitter. I'll say it here. Tyler Craig, and I know we're a small community at Tackle Trading, and I like the fact we're a small community, but Tyler Craig in this industry of finance is one of the purest, best, most gifted writers in the financial industry. I love how he breaks down advanced, difficult concepts, make them easy to understand, and he entertains you along the way. You go on a journey with his writing, and I just absolutely love it. So definitely check out the newsletter from this month. It was on beta weighting, delta weighting portfolios. We brought Tyler on to the podcast yesterday to talk about the newsletter, to talk about beta and delta weighting portfolios. It's a very, very important concept. And I hope you guys enjoyed. I know I did. I sat back and listened to you and Tyler go on, and I just loved it. Tim, thought you guys had an amazing conversation, and then we played a game at the end of the podcast, the game of games at the end of the podcast, where I got a few games from Activision and Take-Two Entertainment and specifically EA Sports, and I asked the coaches, okay, who owns this game? And we played a nice little game on it, and you guys will enjoy that one as well. So hope you guys enjoy the podcast this week, and if not, we still appreciate those 5-star reviews and downloads, guys. So appreciate that.
Yeah, it was fun. I mean, now I enjoy the podcast so much, but obviously, conversation with one of the coaches at Tackle Trading, like Tyler, is always going to be enjoyable. So, give it a listen, guys. Like Matt talked about, there's a little dispute in the game. I'll just say that and leave it right there.
There's no dispute.
All right, guys. Wonderful show here today. Noah, as always, appreciate you joining us and breaking down the information for our traders out there. I'll take a look at that Traders Lounge recording as soon as it's posted on our website, probably in the next day. Love those that you're doing there. And outside of that, guys, have a wonderful day. Stay safe. Stay focused on your rules. Keep executing and focus on education. If you're new and you're looking to become a trader, focus on the education side first. Get your skill sets up and running, and we'll be here to help you with that. So we're out for today. We'll see everybody tomorrow, Wednesday.